Okay, we are live. What's going on, Buck and John?
Oh, hey,
Hello.
I'm doing some light reading here, Dave.
Oh,
Just a little bit of light reading. Hold on. I just want to find out what happens to Little Red Riding Hood. Hold on a second. And the big bad misinformation wolf got her. So
oh, badum. Awesome. Good job. There you go. What's in that
Hiya.
game? So what's up? Hello, Facebook. Thank you for watching our nice little Q&A that we're about to do here. I present to you two of the smartest people I know in this business, at the very least in a Las Vegas level. That is fellow team leader of Keller, Buck Hujabre. Say hi, Buck.
Hey, Buck.
Yes, and then of course John Obradovich with Cardinal Financial. Say hi, John.
Hello, everyone.
Awesome, awesome. And then of course Daniel Mahabir. So the three of us were coming at you to talk to you guys about all things real estate. You know, there's been a lot of things that have been happening. Buck, John, and I have been texting each other quite a bit. It seems like almost every day, in fact, almost every other hour of every day, there's something new coming up. And so as we want to live out our commitment of giving back to the real estate community and keeping the people we care about most up to date, we figured now is as good a time as any to provide those updates to everyone. So hence the meeting. So first of all, Buck and John, thank you guys for spending some time. Let's just go ahead and jump head first into a couple of things here. We have a list of things to discuss. If you're watching, please use the comment section to leave any specific questions as well. That way we can go ahead and get it on here. So first thing, John, we're just going to go ahead and cue you up, man, because you're our mortgage guy. We've heard a lot of crazy things about what's going on with mortgage interest rates, especially over the last week, right? We've seen as recent as less than a month ago, all-time lows. Then all of a sudden it started to rise. Then it had a substantial increase. Now we just don't know where we're at. Talk to us around what's going on with mortgage interest rates.
So the feds came out yesterday with a term, we're all in, and we're going to do what it takes. And they've started buying mortgage-backed securities or mortgages at the tune of $50 billion a day. They're going to do this through Friday, the 27th, and that's really stabilized interest rates. We actually have a situation where the last 2 days, interest rates are starting to go back towards the low threes again. And we anticipate that this may continue for quite some time. We need to get the mortgage industry and the real estate industry on stable ground, because I believe this is going to be part of where we have a recovery come from, right? So if people refinance their house, save a couple $100s a month, that'll make their situation a little better. And if you have a really low interest rate, say 3%, and you were looking at buying a house just a few months ago and you couldn't afford that $350,000 house because the interest rate was 4%, and now you can afford that house at 3%, that's going to get some buyers off the fence. So I believe that the mortgage industry and the real estate industry will be very stable once we kind of shake out all this time that we're all sitting at home doing Zoom meetings.
That's feels like that's been the week for us the past week, right?
Yeah. Well, this is all fluid right now, right? I mean, I'll tell you that I've had conversations with KW agents that I'll tell you one specifically. I had a conversation with Johnny Chow and Melissa last night about a transaction that was blowing up. And they asked for my input, and I told them I didn't think it was going to get done, but I could try. I had 2 lenders left that I think could get it done. 2 hours after we ended our phone call, those 2 mortgage companies stopped doing business altogether. So one of the things that I think is important, so I want to make sure we always are trying to find out the client's why, how long are they going to stay in the house, and the motivation, right? I don't see that a lot in the videos that we're talking about online right now. I hear a lot of information like, you know, the numbers say it's a great real estate market. Well, what if the numbers don't show it's a good real estate market in 30 days because everyone doesn't buy anything for 30 days, but then 30 days later it goes back to gangbusters? There'll be a point where the information we're giving them is no longer there, but yet your video is online forever, right? So the videos that are going online that are factual today may not be factual in 30 days.
They may not be factual in 30 minutes based on the way that everything is changing, right?
Right, yeah. So I think it's really important that we always bring it back to the singular of each person. You know, why are you looking to buy? What's your motivation, and how long do you plan on staying in the house? And that way, that'll always answer our questions, right? But to go back to Johnny's situation, the reason why I was 5 minutes late to the call was I was talking to his seller and Johnny, giving them, well, do you think, John, this loan will get done? And my response was, do you care more about this house selling to these people, or do you care more about this house just selling as fast as it can for a fair price? And their statement was, no, we want it sold right away. And I said, well, then you need to tell them, look, you can have some more time, but we're putting the house back on the market and we're going to sell it. And we're going to sell it for a fair price, right? And so it's digging on that person, making sure that you're accomplishing what you need, as opposed to, we got a buyer, let's stay on it. No, you don't know if you have a buyer or not. And don't forget, last thing, and I'll give it back to you. Don't forget, use your lenders right now to vet your listings, to vet your buyers that are pre-approved, to vet the lender, to make sure you got a really strong situation. Because on our sales call today with a company-wide call with 2,000 employees, they're talking about the market's going to a 60-day lock pattern right now.
And tell us a little bit more around what that means.
So normally we would lock a loan for 30 days, which means the rate for the client is guaranteed for that 30-day period of time, because we believe we can perform in 30 or less days, right? Closings in 21 days, things of that nature. Fannie and Freddie's come out with changes to the appraisal process and verifications. We'll get into that later. Might not be able to get an appraisal in 2 weeks. Might take 3, might take 4. The people in the house may not let the appraiser in, right? So we have to be really fluid in what we're doing, and we can't go and promise a rate to a client for 30 days and then not perform. And any lender that's telling you right now that they can close loans in 30 days, there may be some one-offs, but we're talking about $5 trillion in mortgages that can be refinanced right now. Now, to put that in perspective for you, last year, both purchase and refinance volume in a stellar year was $2 trillion.
Wow.
Purchases are not going away.
Oh my gosh.
Okay. So you're talking about 2.5 years of volume just for the refinance piece.
So okay, there's a few things there. So let's unpack a couple of it. And then Buck, I would love to hear your thoughts. So mortgage interest rates, we really don't have necessarily a steady pulse. I think right now what you're saying is it's kind of stabilized, and we'll see further stability as time progresses. There's some catching up to do is what I'm hearing.
Correct. Yep.
And we can dig into that.
Rates are better though. We're not in the 4.5. We're in the 3.5 range now, and we're trending towards 3, right? Depending on your situation, of course, right? I put an interest rate on an investment property today of 4%, where just a few months ago that was 5.25.
Yeah. And so what you're also saying though, because you're saying interest rates, like specific numbers. And I think to your point though, as real estate professionals, we got to be very careful about what we're quoting out there, because
you can't quote rates.
Like, yeah, exactly. And one of the biggest reasons why, and in fact, I was talking to one of my good friends in this business, Christina Ingram, who you both know. And, and the reason why I bring her up, she's been in the business for a while. And what she's relating to the volatility that we're seeing in lending right now is what we saw back in 2008. And so as a result, to your point, Buck, every 30 minutes or so, something is new, something is different, which is why we got to be very careful around what we're saying. Could put us in a position of liability for ourselves and our company.
Well, if I may add to that,
if you guys get caught quoting rates, it is a CFP violation, and it is very expensive. So if you quote rates in videos or in any posts, that could hurt you. Now you can say, hey, I saw online that Fannie Mae said interest rates are this. That is legitimate. You're just talking about an article you saw, and you're not giving a quote of a rate.
Okay.
Get the difference?
Yeah. Buck, what were you going to say?
So I think that, it's great that we're having this conversation around, what is this going to do today? What is this going to do tomorrow? And a conversation around stability. Here's my point, and here's my thinking. And this opinion and $5 will get you a cup of coffee, right? So it could be a completely worthless opinion. But the first rule, I want you to go back to a Brad Pitt, Ed Norton movie. The first rule of Fight Club is?
There is no Fight Club. Or you don't talk about Fight Club.
Yeah. You're close.
Mamma mia.
You don't talk about Fight Club.
Damn it, Daniel. I'm going to try that again. Okay, Dan, here we go. Because I was on a roll and you.
Let's do it. Fight Club. There is.
You literally just derailed a train that wasn't even moving. Okay, so let's try that again. Ready? Okay, let's go. So I'm going to refer back to a movie starring Ed Norton and Brad Pitt. You better be Googling this in the other windows to say the right quote right now, Mahabir. The first rule of Fight Club is?
Bring your own beer. Just kidding. You don't talk about Fight Club. Okay.
Never talk about Fight Club. So we're talking about something that doesn't exist right now. What do I mean by that? You keep hearing the experts say, well, here's where the stability is. Here, the first rule is that there's no such thing as stability right now. It doesn't exist. I'm talking financial markets. I'm talking mental health stability. I'm talking about every pundit on the planet that's having this discussion. And the minute that you try to do something, you're writing poetry on the surface of water right now. There is no stability, okay? So the best thing to do in this scenario is buckle up and get ready for the ride. And by that, I don't mean that to sound negative. I mean, put yourself with people who had experienced, preferably all three, but any one of these. The market immediately following September 11th. The market leading up to and immediately following the Great Depression, recession. Or third, let's go back a little bit further. Anybody who was around during the S&L crisis, not Saturday Night Live, savings and loan crisis. There's been a lot of crises on Saturday Night Live as of late, but I'm talking about the savings and loan crisis. And Daniel, I feel like you should be laughing harder. You're not giving me enough credit for that joke. The reason I say that is that while none of these things are related, while none of these things are interconnected, the behavior in the market looks for precedent. Okay. Mm-hmm. And they're going to look and see how mortgage companies, how real estate professionals, how real estate investors, how Wall Street, how Main Street reacted during those times of significant instability. Now, here's the thing. I anticipate there being a prolonged recovery cycle as a result of this. Anybody talking about the shift is coming, the market's changing, that's closing the barn door after the horses got out. You need to start planning for a period of instability so that you can advise your client base how to make the best decisions by giving them good advice based on precedent that has happened before. That's to John's point, right? The idea that we're going to talk about what the market is doing by saying, the 60-day lock, no lock thing, they're trying to create some semblance of stability so that we have a foundation to build on. Does that make sense?
Yes,
yeah,
but...
and you gotta and to add to that, you have to take it back to their situation. That's
there you go.
We're giving this information in broadband, and we're not helping them understand their situation equates to it here, right? We got to bring them together, and that's what I'm not seeing online right now with videos.
It's too salesy for my taste. A lot of what I'm seeing is too salesy, and I don't like sales. I like advisory capacity. If I tell you to do something, if you're in my book of business, if you're one of my former clients, if you're one of the people that I've had the privilege of working with, representing, coaching, or training, when I tell them don't do it, they typically won't do it. So that when I show up and go, hey, now's the time, push the button, let's go, they'll pay attention. And that's only because I've built and developed trust from an advisory capacity, not a salesy capacity, right?
Mm-hmm. Yep. Keeping the advisory hat on, right? It's not opinions we're talking about here.
That's right.
Right. And I think that's also very important to disseminate here. Okay. So unpacking still our first conversation before we move into a couple other things here. You also mentioned the 60-day lock pattern, right? So the reason we're seeing 60-day locks as opposed to the traditional 30-day locks is, again, because we're seeing transactions likely take longer. And so as a result, there isn't as much comfort around committing to a 30-day timeline as we had seen even as recently as a month ago.
If I were a buyer's agent or even a listing agent, I would have very in-depth, again, taking it to the singular, I'd have very in-depth conversations with the lender of, do you guys have a policy that purchase is first priority? If so, what are your turn times? What are you guys doing to make this happen, right? Am I saying that we're going to close in 60 days? No. Our company is saying we're going to lock everything for 60 days so that if it doesn't close in 30 days, the client is not going to be financially at risk. Okay? Because the client is going to be the first person to be asked to pay for that. Hey, you didn't get us these documents, so therefore, or we're the lender going and saying, hey, look, because ultimately the client always pays for it. If we have to pay for it because we have too much business, well, that's going to make our rates higher, right? I love when people say, oh, I don't have to pay for it. Yeah, you did. You paid for it in some way, okay? It might just be over everybody. Right now, we don't see any problems closing loans close to 30 days, but I'm going to want to know which client it is. I have a client that I just got from Gordon and Carlin, and she said at 2:00 he'll be calling you. He called me at 3:00. We had pre-approved by 4:30 with all of his documentation in hand, his application complete, everything done, and had a real approval inside of an hour and a half. That client is going to respond fast, and I'm going to be able to cut down some turn times and make that transaction go faster. I've got clients right now that we're trying to get pre-approved for the whole program that still hasn't gotten me all their documents in 3 weeks.
Wow.
That person, I'm going to say, look, this is going to take a little longer because when we have a condition, they're not Johnny on the spot. So you have to go to each situation. You should be having really in-depth conversations with the lender, with the buyer's agent, and of course, if you're the listing agent, getting all parties on the same page.
Yeah. I got to say, Dave Tina, I think all three of us can agree, a smart man. Hey, Dave, if you're watching still,
Love you, Dave.
He put a comment here that says the only thing we can control is how we react to things we cannot control.
That's exactly right. I love you, Dave. You're my spirit animal, bro.
I think as agents, we got to keep that front of mind for ourselves, for our clients, for our partners, right? Everybody involved with the transaction. There's so much that we cannot control, but how we react is really going to help with the process.
Well, that goes back to writing poetry on the surface of water. You're dealing with something that is changing minute to minute. I'll give you a great example. Look at what the stock market did. Not that it's directly related, but it has an underlying. You swung a total of 20% over the last 3 days. 20%. It was up almost 10% today. If that is not the definition of instability, nothing is. Now, not negative instability, right? The market is trying to find its bottom. It's trying to find where it's going to level off on the stock side. You're looking at refinance like John was talking about. A lot of people are flooding the market because money is cheap. Interest rates did the opposite of what everybody expected them to do because of the laws of supply and demand. The market was trying to find stability, right? So the fact that all the instruments that we are using in the industry that we are in, which by the way, I still think is the single greatest industry on the planet because we are net worth creators. We are net wealth creators. That is our job. That is what we do. If everything around you is cacophony and everything around you is going insane, the most important thing for you to do is give good advice and not worry about the things that you have no control over. I promise you, if you give good advice, you'll win every time.
And the advice is always what they need, right? Fulfill what they need.
Exactly.
Fulfill their why.
Yep, exactly. Let's go ahead and start talking about some specific items here, and then we'll go ahead and hit some of the items on your agenda, John. So, in fact, let's just go into some of the updates. So Fannie Mae and Freddie Mac have announced some changes to loan guidelines. Can you tell us a little bit more around what's going on there? And not too high level, enough where...
This one's super simple.
Okay.
So we're going to go verifications first, verification of employment. So they're now allowing for people that don't have, so let's take a school teacher as an example. Mm-hmm. Right now, we cannot receive a verification of employment because there is nobody working at CCSD. So we could send in the verification, no one's going to fill it out. So we have 3 options now. First option is if a superior sends an email from their work email that states within a certain period of time that they're still employed and receiving income, we will accept that. The second way, a current pay stub that's within a set period of time, and I'm not giving the exact period because it's going to be case by case, okay? If you show a current pay stub that's within, it's probably going to be 7 days or 14 days, and it shows you're still getting paid, that will be acceptable. And then the third way is an actual bank statement showing the direct deposit into your account, and it clearly states CCSD, right? They can't say $3,000, work. That's going to be a little harder. Around appraisals, this is a little tougher. So their words are they are opening more appraisal waivers, and they are opening for more drive-by appraisals. Okay, this is 100% case by case, because when we run it through the desktop underwriter, which is the AI you guys love to talk about, of how we underwrite loans for Fannie and LP or loan processor through Freddie Mac, it's going to tell us what it wants. It'll tell us appraisal waiver. We don't need any appraisal. It's up to the client whether they want one, or it's a drive-by. We only need to do a drive-by appraisal, or it's going to be a full appraisal where the appraiser has to walk in. Obviously, the more you put down and primary residence and the higher your credit score, the better off your chances are that you're going to get that appraisal waiver. Okay, so again, that's going to go back to, hey guys, did you run the DU up front? Did you look to see if there's an appraisal waiver? Can you put a little more down? Did you take the down payment maybe to 25% instead of 20%? Did you get an appraisal waiver there that might help the client? Or if you move around some debt and lower their DTI, right? There's going to be a lot of factors that go into it, and that's why I can't give you one answer, but know there are options. Know that we are trying to fix this. Fannie and Freddie are the only ones that have made any changes on this. VA and FHA, you still have to have full-blown appraisals.
Okay, so basically they've opened up the possibility of drive-by appraisals or even a full-on appraisal waiver. It just depends on each case. So
well, we had it before.
Okay.
They're just they're making the criteria a little easier.
They loosened it. And we're going to come back to that term there in a second, because I think when you ever hear anything around loosening of any sort of loan guidelines, some people will shudder. So we're going to address
immediately, right?
So we're going to talk about that in a second here. In fact, let's kind of answer that. Why did they loosen this when it comes to the appraisals? Is it specifically because of COVID-19?
Yes. So they completely understand that there are going to be good situations where good people are selling their home and good people are buying their home. And when I say good, I mean they're not pushing ratios. They're not asking for too much for their house, and they want to smooth over as many of those transactions where if we would have been 2 months ago, we would have got the appraisal fast, we would have closed fast, because the Fannie Mae and Freddie Mac believe that at some point in time, we should be able to get the whole loan process down to about 14 days. There's no reason that you should be able to walk into a Ferrari dealership 30 days ago, maybe not today, and buy a $250,000 car in a couple hours, when you can't even buy something that's much more tangible like someone's home, and it takes 30 days. So they really want to see this process kind of streamline a little bit. They're working on a lot of different things for the future using AI and things of that nature, kind of like KW is, where they're inputting all that information and they want to have the most amount of information. Well, Fannie and Freddie are going to have more possibly than even KW, because they're not just getting it from KW transactions, they're getting it from other transactions.
Yeah. So then what does this mean as a real estate professional helping buyers? Are we talking shorter timelines, longer time? I'm assuming everything we should be doing should have longer timelines.
Right now, you're probably going to see longer unless you get an appraisal waiver. Then you don't have to worry about that. But how long does the home inspection take? I mean, has anyone ordered a home inspection lately in the last 12 hours? Right?
I talked to one of our home inspection partners, and they said that in some cases, depending on where it is, they're out 5 to 7 days. But they also are in some cases able to pick them up by 9 o'clock that morning. So again, there's that stability conversation, right? The first thing is that there's no rules.
Yeah. So I would just go back to that conversation of, did you talk to the lender? What the lender say? Did they give good? Did they sound like they know what they were talking about? Because if someone said to me right now, "Oh, there's no problem. Our turn times are still fast," that would put up red flags for me.
Okay. Okay. If we transition to another topic.
Yeah.
Okay. So this is more for the buyers, the tenants, those individuals that either own a home or in a living situation. There were some announcements around potential, I don't want to call it mortgage forbearance, but some sort of deferments and maybe even evictions, there being a stay on that. What is going on there?
So for right now, there are stays on evictions. through the period that our governor has stated here in the state of Nevada. Renters cannot be kicked out. They will not allow for kickouts until the quarantine's been lifted.
Yeah,
to even discuss it.
I saw 30 days for Vegas and 60 for Henderson or something like that.
Yeah. Now, nationally, they have done a 60-day no foreclosures for the whole United States.
So I don't have to pay my mortgage for 60 days.
No, they just can't kick you out for 60 days. Now, that doesn't seem that big of a deal, but I think in 60 days we'll have a really good play of what's going to happen. The people that are being laid off right now have a good idea of when they're going back to work and how, or if, or maybe they've gone a different direction and just gone in. I know someone this morning that got laid off. They were in construction. They worked for a very big builder here in town. They have been told they will absolutely be hired back. And he went and got a job at Albertsons today. And he started today, and he's making money because he didn't want to wait, and he can let go of that job in 2 seconds to go back to his really high-paying construction job.
Well, to that,
and that's what's that?
If I may just add to that point, remember that as part of the stimulus package that has yet to be ratified, so before anybody gets upset about the politics of this, and if you'll recall from the last time that Dan and I did this, I am politically agnostic. I believe politics, poly from the Latin meaning many, and ticks meaning blood-sucking insects. Okay? That's where I live. I'm politically agnostic. I don't have a horse in that stimulus package race. Here's the deal. These companies have to show that there is some kind of hardship in place in order for them to qualify to preserve the aid that would go to them by laying people off, by putting people on reserve status and what have you. So in addition to the economy having a shift that requires them to put people off the payroll, off the books, this is strategic so that once the stimulus comes through, they can put everybody back to work again. Sorry to interrupt, but carry on.
No, it's exactly right, right? So we're just trying to get 60 days down the road so that we can have that stability, so that we can figure out how to best help people, and people will have a better understanding of, is school going back in? I mean, I'm hearing every single rumor from, I probably have 3 teachers I'm working on right now, helping them get transactions, right? Getting loans. And I'm hearing all kinds of different things. I totally missed that just a week ago, or I don't remember the exact period, that CDC said nobody going back into 50 for 60 days. Well, that's 30 days after our quarantine. So does that put us then into mid-May where maybe the kids don't go back to school? Or maybe they start going back to school and finish out the year? Like, none of this is going to work. So that's why we always have to get back to what does the client need? How do we help them? What's their motivation?
Right.
And how long do they plan on staying in the house? So does that answer your question?
Yes. I think a couple things there. So this 60-day deferment, right, and no foreclosures. So what happens with those payments then? Maybe this is too soon to say, but are we talking about tacking on the end? Is there interest accrued still?
We don't know, because they just, with a pen, like governments do, you got to help these people, right?
Got it.
So when the CFPB started, right, they said you can't hurt clients. Okay, tell us how to fix that. I don't know, but you better not hurt them, right? And so it's going to be that's even going to be very fluid in how that looks. And I think that's going to be one-off, because you might call Wells Fargo. Wells Fargo on one transaction might say it's going to be this way because they have these type of investors. And then another client calls Wells Fargo because they're the servicer, and they have a whole other set of investors, and they go a whole different direction with it. So I don't really think there's going to be any clarity on this until we start hearing what people are actually having happen and policies start being put in place. But the coolest thing, in my opinion, that came out of 2008, the great housing crash, was mediation for homeowners. Okay? We need to remember, in the state of Nevada, they put in a fabulous bill that gives you the right, if you're a homeowner, primary residence, to go before the courts and mediate with your lender, and that lender has to prove beyond a reasonable doubt they did everything to keep you in your house. Because guys, at the end of the day, We want people to live in homes. We want people to live in communities, and we want people to live in neighborhoods and be a part of that. And if we have all investment and rental properties, that's great, but it doesn't help with community, right?
Mm-hmm.
And that's what we all care about. I guarantee if we all dug in on each of our whys, community somehow plays into that.
Well, that's an interesting point too, if I may, Dan. The thing that people have to remember is that, first of all, it's a PR nightmare if they start issuing notices of default, start foreclosure proceedings for really anyone. I would say within the first 120 days after this all blows over, right? Because everybody's in the same boat. Everybody's going to be in the same place. I remember one of my favorite adages. It made me chuckle every time that you'd have people come in after the crash and they say, well, my credit sucks. Do you think I can get a loan to buy a car or buy another house? It's like, dude, everybody's credit sucks. Everybody lost. Yeah. Right? Like it's the great equalizer. I think a lot of that's going to be true the other way this time, right? So social media is much faster than it was in the last economic correction cycle. So you better believe that if somebody gets served a notice of default from any of the big banks, they're going to be posting that on social media so fast. And that's the quickest way to guarantee that a home buyer does not apply for a mortgage with you, right? So I think we're going to have a bigger than normal cushion, especially because this has nothing to do with people making bad decisions or people being given bad advice. This is something that nobody saw coming, and there's going to have to be tremendous leeway. There just is. Otherwise, business comes to a grinding halt.
The best advice you can give right now is to call immediately. Mm-hmm. Okay? Call immediately. And if for some reason they don't feel comfortable making that call, have them call me and I'll call the servicer with them on the phone. I do that all the time with my clients. Okay? I just did it with one of Lance's clients that actually was a part of a show here in Vegas. And we talked through figuring out all their paperwork, and they're trying to get a modification right now. And this happened before this. This happened about 30 days ago, maybe 2 or 3 weeks ago. I'm happy to do it because I want to make customers for life. I want to make clients for life. And the way that you do that is you got to lead, right? What do we always say, Buck? We got to lead with
chocolate chip cookies.
Exactly. Contribution. Right?
Come from contribution. Lead with.
I was going to say revenue.
Revenue. That's a good way too. That's your regional call. That's a whole different call.
Yeah, the realtor ad. Yeah. Okay. All right. Let's talk about a couple more things here. So first off, actually, like you kind of brushed on this, John, and it leads to a bigger question because I don't want to spiral into this non-QMs. Now we're seeing a lot of non-QM mortgage companies are closing up shop and they're getting out of the game. I think the bigger conversation that we need to have is mortgage companies closing up shop, loan guidelines loosening, right?
We're clarify closing up shop. Don't say closing up shop. That's not actually what's happening. They're
pausing. The word they're using is pausing.
Okay. Thank you for the clarification. So
connotation that goes with closing up shop.
We don't know that they've closed their doors. We just know that all their employees are working from home, to my knowledge, and they've paused any current or future financial obligations.
Okay, so then is there writing on the wall, because I see this is somewhat on your notes here, is this writing on the wall for doomsday of any sort going on with the real estate market?
Well, the non-QM or non-qualified mortgage is actually a very small segment of the real estate industry. I don't know the exact numbers. It's probably Google. You can probably Google it and find it. But it's not going to be it's not the bread and butter of our industry. The bread and butter of our industry are primary residences, people buying their homes, first-time home buyers, right? And those people, I think, are going to come back to market because of the attractive interest rates. So is it a doomsday? No, the liquidity issue is a doomsday, and that Fed stepped in to fix that. And if you want to understand that, call me on the side, because we can go down about a 4-hour rabbit hole explaining all the reasons why this stuff happened, margin calls, all kinds of stuff. But think of it this way. There's only so much capacity for money right now. And if you, Dan, had $100, would you rather invest it into Fannie, Freddie, FHA, and VA, where the government is backing the security, and right now they'll buy the security back from you if you don't want it anymore? Or would you like to go put your money in what's called jumbo financing, where you're putting it on your books, or that non-QM where it's not really the top borrowers? Those are your foreign nationals, your bank statement programs, et cetera, et cetera. And the easy answer is you want to do the safe bet right now. That's what everyone's looking for. So because of that, the Feds are just trying to give time to the market to come back to market, right? And have that appetite again and stabilize everything.
Well, and the other part to that too, that we're going back to stability, right? Like the whole stable piece of all of this is what the market is trying to find, so that the businesses can find stability, so that the people can find stability, right? It's all leading into the same thing. Now, the destabilizing factors, at the risk of sounding like a pessimist, which I am absolutely not, okay? So please don't misunderstand me. The destabilizing factors have yet to occur. What do I mean by that? Well, the destabilizing factors have not and will not show up for at least 45 to 60 days, okay? So you're going to see a lot of instability from the market because they know, well, we don't know what the job market's going to look like 60 days from now. We sure as hell don't know what the inventory is going to look like 60 days from now. We better believe we have no idea what the interest rates and what people are going to do if they lose their minds and start pulling money out of their 401ks rather than investing more in them at the bottom of the market, right? So we don't have an answer and won't have an answer for a lot of that, as much as I'd love to have one for you, right? We won't have an answer, I think, any earlier than 60 days. Now here's something to take, another thing that make me sound like a pessimist, and I swear to God I'm not. The economy has shifted. It's done. It has shifted gears. We're in a totally different place. Anybody who's pointing to where we came from is losing valuable time, okay? You have to look forward in this situation. Economies bounce back. Humans don't. The whole thing with the coronavirus and the scare with all the closing of business, I promise you, every time in history, economies have bounced back, but people don't when they get sick and potentially get contagion and pass away, right? So temper the fact that you're dealing with an unprecedented crisis, along with the fact that people need to give this some time in order to get to that stability. The market's going to look very, very different for a very, very long time. That doesn't necessarily mean it's a bad thing. In adversity, there is nothing but opportunity. Make smart decisions with the information that you have, going back to the two key points. Why am I doing this? What's the motivation behind the why I'm doing this? And realistically, how long do I plan to be doing this? How long am I going to be in the home? How long am I going to, right?
Yeah, I mean, those are the exact conversations, because whether or not the market is going to get better or worse is really irrelevant to where they have to live. Exactly. If they're living in Vegas and they have a job right now, they have to live somewhere. And the stability for them will come in the safety, okay? Because right now, that's what everyone's looking for, is stability and safety in their own lives. They can't watch sports right now. They can't go to the movie theater right now. Yeah, I know. Yeah, I know. You won once. You can't do all those things that take our mind off our problems, right? You can't even come together as a group and go to a bar or go to your church, right? Whatever your situation is, and come together and feel better, because everyone's feeling the same way right now. Everyone's feeling alone. And so if we can help them understand that their situation is fixable, that we can help them with security and stabilization by getting them into their home and getting them in the right situation in a budget that fits what they care about, right? Not, hey, what can I get you pre-approved for? But what's your budget? If your budget's $1,200 a month, we probably shouldn't be looking at $350,000 houses unless you're putting a substantial down, right? And so it's always taking it back singular to them. And I would never call you a pessimist other than in football.
I will say this, the human contact piece is missing, right? I miss that. As you can probably tell, I'm extremely shy. I'm very introverted. I don't like to be in public. I'm sure you've gathered that from these videos. But the lack of human contact it's a very tangible thing, right? In terms of being able to high five your colleagues and workers. So I've started hugging my water heater because it's warm and it's always there for me.
Okay, so moving on. You guys are kind of answering the first off, really quickly, Christina in the comment section said, you can resurrect an economy, you cannot resurrect a dead person.
Love
That's
it.
right. That's what Buck said.
True. Yep. I think you guys are also answering the question, right? A lot of people, they wonder when there's so much, and I don't even want to call it uncertainty anymore because, another good friend of ours, Jamie Cox, he states it's not as much uncertainty as it is an unwillingness to accept, to your point, Buck, that we've moved forward towards a new time, right? And so, but with that
well, there's seven. So don't forget,
mm-hmm.
and my wife taught me this, who's a very smart person, way smarter than I. There are 7 stages to grief, okay? And each person goes through those 7 differently.
Exactly.
I might jump to the other side and say, look, let's go, and she might not. And I have to give her that space and that support for her to go through it the way she needs to. Or any person, our clients, right? I mean, we should be treating our clients like our spouse, caring about them, talking to them, understanding what they're feeling and what they're going through. I mean, I hear you guys all the time say, I'm a therapist, right? So let's move on.
Yeah, I think, well, you guys are answering the question of, is now a good time to buy or sell? It depends, right? Based on the conversation we have around those 2-3 questions there, right? What's going on with your situation?
They'll give themselves up if you ask the powerful right questions, right? That's the obvious answer will give itself up when you're asking the right questions.
Well, if you, so I'm a huge believer in Todd Duncan. I've trained with him since 98 or 99. I've taken the high trust interview 2 or 3 times. And the high trust interview is just the IBM, the old IBM scripts that they taught, which is ask a question, acknowledge the question, ask the question back to them why it's important to them. So in essence, when you talk about mortgages, the number one answer is always interest rate. I want a low interest rate. That's never the thing they really care about. Because then I'll say, I hear that a lot. Help me understand why a low interest rate is so important to you. Oh, I want a low payment. Oh, okay. I hear that a lot too. So is interest rate more important or low payment more important? Oh no, low payment. Okay, so now we got low payment first, interest rate. And then once you get through those 2 questions, now we're going to get to the spot where the road starts to split and we really get to their true essence of their why and what they're trying to accomplish. Okay, well, why is a low payment going to help you? Oh, my kid's about to go to college. Oh, I need to pay off my car loan. Oh, my wife wants to get pregnant, right? Now we're really getting into their why. I promise you guys, the first 2 answers are always a smokescreen. They've been conditioned just like you, okay, to where if I say, is this a good market? You guys are going to start spending the numbers, right?
Yep.
So dig on them. And when you do that, very few of them are going to say they've ever had that done. And they're really going to appreciate you because they feel like you're listening and you're proving it. I even go and say, hey, I'm going to take some notes. Is that okay? And I ask their permission and I start writing it out. And I just keep referring back and I keep acknowledging it and reading it back to them. Here's the best part of all. When you get to those true whys and then the seller doesn't want to pay for the water heater being fixed or the buyer wants $1,500 in repairs done, you can go back to those whys, reread it to them and say, is this still the most important thing? And are you willing to give this up over that situation? Well, because if the answer is yes, then we got to redo the whys. Well, then they have the answer of what they should be doing.
So you're on a roll here. So this is probably a good time to ask a question that just came in then. For the people who are ready to close for a new house, should they continue or just back up and wait to see what happens with the market?
I need to know their financial situation and how secure they feel.
You can't answer that question. So that's a great example, Dan. So has your financial condition changed? Has your employment situation changed? Did you just find out that as a result of you not going to work that you're expecting a baby? Surprise, right? Like
has your motivation changed? Yeah.
Right. So as much as we would love to have a quick, short, to the point answer for a question like that, we would be intellectually dishonest and doing a huge disservice to our client base to give an answer to that question without the extended information.
But you know where that question comes from. It comes from 2008, right? Where
no,
people
it comes from today also.
Well,
Guys,
yeah, the fear of what happened, right?
There's a whole generation of people. So if you want to know what today is, I've been saying a lot, it's 9/11, right? And I finally figure what I believe, it's my opinion, this is a collision of 2008 from the financial side. This is stock market and GDP versus housing. So don't say I'm saying that, right? All of a sudden, all this wealth was gone, okay, overnight. It was a collision of 9/11 and 2008 from the GDP side. So if someone said to me, hey, should I close? The very first thing I'm going to ask them, what are your fears? Yeah, what's your financial situation? We'll get into that in a second, but what are your fears? Because Justin Gannon and I just had a client that said, I need to cancel. And Justin's like, really? And he's digging on him and he's doing the right things, right? And he said, I'm afraid, he worked at Jersey Mike's, I'm afraid I'm going to lose my job. I don't know. I sent him a text message. We canceled the transaction. He was really happy that we supported him. He said, look, you're going to buy a house. It's going to happen. And you're going to use us because we took care of you and didn't say, hey, we have commission breath, let's close.
Right.
You out? Let's get you done then. Let's get your money back. Let's get you safe and sound. I sent him a text this morning, just said, hey, I've been sending a text message to a lot of people. How you guys doing? You okay? You need anything, right? He responded back, I wish I hadn't got out. And I called him and I said, why would you say that? And he said, because it was a good deal. I said, there'll be another deal. Get back to stable ground. He goes, you're right. I know. I'm just second guessing my decision. I said, you shouldn't second guess a good decision, right? Don't play Monday morning quarterback to yourself.
Yeah, exactly. Don't play Monday morning quarterback. The other thing that I think is extremely key that I'm not really hearing a lot of is the fact that you've got to do your own personal financial analysis because you're going to have to have a roof over your head one way or another, right? So the two key things there are, if you're exchanging a rental payment for a mortgage payment that includes your insurance, your taxes, and everything else that you didn't have to worry about, okay? So when you buy a home, people go, oh, it's another $100 for property taxes. Oh, it's another $80 for HOA. No. Right now is the time that you should be exchanging a like payment for a like payment.
Well, okay. Here's the thing, okay? And this is somewhat of a devil's advocate, putting myself in the shoes of that individual who put that question there, right? It feels like the world is on fire around them. There's fear rampant. There isn't a lot of logic behind why I should cancel. It's more just an intuitive feeling that because there's all this madness and there isn't as much certainty in the world around things are good, I'm making a big decision. I don't know if I should be making it with all of this going on around me.
Then don't.
And don't make that decision. There's no harm. Unless you're going to lose earnest money deposit, unless there is a failure to perform clause, if you're at that point, then I would suggest for your own peace of mind and to avoid an ulcer, look, most of us are going to be lucky to get 90 passes around the sun, okay? 90 passes if we're lucky. In the grand scheme of things, your mortgage lives with you for 1/3 of your life if you get 90 passes around the sun. By the time you're ready to take a mortgage, you've already lived the first third of your life. You're 30 years old, you're going to pay off for the next 30.
And that's if you stay in that house for 30 years.
And that's if you stay in that house for 30 years. That's exactly right. So I would say if you have any modicum of uncertainty and it's not going to hurt you financially, then make the decision that lets you sleep at night. Real estate comes, real estate goes. Opportunity comes, opportunity goes. I love the adage, don't wait to buy real estate, buy real estate and wait, especially in a condition like this where money is still relatively cheap and you're essentially fixing your rent payment for the next 30 years. It won't increase. I got news for you folks at home that may or may not remember this. Recessions increase rent rates. They increase the cost that you will pay for rent. So the chances of your rent coming down over the next 3 to 5 years is very slim. Okay.
That's very important, right? If you're canceling, so you go back into a rental situation it's not improving your situation, right?
Not necessarily, no. And here's the deal. How would you like to pay? Look, if you bought a house in the 1980s, the average mortgage payment in the early 1980s was a little less than $700 a month. 1980 till today. Okay?
Well, your house would be paid off, Buck.
Right.
Your house would be paid off, Buck, so it'd probably be less than 700.
All right, fine.
But yeah, you got to dig on them. Everyone's scared and they're just looking for support on their decision, right? And, you know, you can take this really granular. You can go and contact the gas company, the water company, the electric company. You can contact all utilities and ask for the last 12 months of bills. And you can literally go and figure out your whole budget and know if you're going to be safe and sound. But we're not telling them. How many people on this call right now knew you could do that, knew that you could ask for 12 months of utilities, and even talk to their client about doing that so they felt even more secure?
I got one for you. We coach years ago, we were coaching people during the last correction, and then a lot of our agents are still doing this. When you take a listing agreement, as part of your listing appointment, one of the bullet point checklist items is to get the last 12 months of Southwest Gas, the last 12 months of the water bill. So that way we know about a water leak if there's one occurring, or if you have a high bill and there's no pool in the backyard, right, for water, so that you can turn that over as part of the due diligence. First of all, as an agent, how much more powerful are you when you walk in and say, I need all of these things so I can protect and promote the price, the highest possible price for you, by having the answers to the questions that they haven't even thought to ask yet, right?
Sure.
Part of that is, now if somebody does have an objection at this point, you can go, well, we turned them over at $60 a month, right?
Yeah. Esther, you're asking all the right questions. And you know what? I'm going to give you a call when I get done with this. You know, she's asking, you know, is coronavirus a good enough cause to cancel the closing? There's a lot going on in here, and I think it's worth a conversation to kind of sift through what really is the situation. So,
Jay, there's a great video that JC Melvin posted today inside the KW Southwest office site talking about there are going to be people that are scarred right now, and we need to help them help themselves.
Exactly.
And so there are going to be people that shouldn't be buying houses, and we should step up as professionals and say, you're right, you shouldn't buy right now. Your situation is not right. You work at Jersey Mike's, and yeah, you are going to possibly be laid off. Now, he's still employed, but what does Jersey Mike's look like?
Exactly.
How is our whole industry in the restaurant industry going to look a couple years from now? Okay. I will tell you, it's changing the mortgage industry. We've been talking about e-signings for years. Yeah. Because of this, you will start to see this being fast-tracked through the mortgage industry. A fast track means it's going to take a couple of years to get done because there's so many different moving parts to it, but it's going to happen now faster than 30 or 60 days ago.
Oh, so yeah.
Do we have coffee shops that all of a sudden they're only drive-throughs?
Right. I feel like
to go sit by people.
Yep. I think a lot of industries have been forced into the fourth industrial revolution now, right? And things are forever changed. Yeah.
If you've read Platform Revolution, it's eerie, right? It's literally eerie. There's a chapter, and if you haven't read it, I highly recommend you read Platform Revolution.
Platform Revolution.
Phenomenal book. And it's about the fourth industrial revolution and those who are refusing to adapt, not just in real estate, but any industry that has a huge tech-centric piece behind it. Platform Revolution will change your life. Now, it's eerie, the parallels that book draws to the what ifs. It says, what if an atomic bomb went off and you physically couldn't get into Kentucky, but every other state was operating? What if an atomic bomb went off in every other state except for Kentucky, and Kentucky's the only one that's operational? You're Kentucky right now, right? We're doing this virtually. I would love to be sitting over coffee having this discussion with you with an audience and a microphone and a Q&A panel, but we have been forced to adapt when we didn't necessarily think it was that important in the first place.
Zoom, I'll tell you guys this, Zoom meetings in the mortgage industry has been used for like 3 years. And it just hasn't been highly adapted because people are like, I still want to meet belly to belly to my client.
Yeah.
How many people are never going to want to be around people again?
Yeah. Yeah. I have to say this, John, don't move. But you guys know those hats with the little umbrella thing at the top, the little propeller thing at the top?
That's me.
It looks
so Buck is not shaving, okay, until the quarantine's up. And I'm wearing a hat every day until the quarantine's up.
Right, and Buck is hugging his water heater. All right, so let's speaking about things that didn't necessarily close, but just suspended and kind of walked away for a little bit. iBuyers, Buck, you're walking
Yeah.
away. So some things happened with iBuyers where they pretty much said we're going to suspend certain operations. So what exactly is going on there with Zillow, Open Door, Redfin now? What happened?
It's our favorite word.
Yeah, it's think of it as a margin call. For those of you who don't understand what a margin call is, these guys had massive war chests of financial capital that was tied into the stock market. They were buying and selling using stock market money, essentially hedge fund money. Now, here's the issue that God, I hope I'm not sharing privileged information right now, but if I am, yeah, the iBuyers model cannot afford to hold property more than 200 days. It doesn't pencil in their pro forma. When they acquire a property, their turn time has to be less than 200 days when they're deciding if they're going to buy the property. Otherwise, they will pass on it, okay? And the reason for that is the internal loan maturity money. Their own money has to be redeployed every 200 days because of the cost of the money.
And really quickly, just so we're all on the same page, because not everybody watching is a real estate professional, the iBuyers are these big companies that are basically buying a house and flipping it.
No.
Simplification?
They're all situations to where they're buying ugly homes, right? iBuyer is not something new.
For purposes of the general public, yes, you're 100% right, but for the purposes of the general public, they're buying market share, right? What they're doing is it's a used car deal. So you take your car in, you can trade your car in and get another car, and then they just discount one severely so that they can have margin on the other one.
Okay.
That's
exactly
no disrespect to the iBuyer, because we have one. We have Keller Offers. We do it ourselves, right? But we've never felt that Main Street and Wall Street should ever be negotiating directly together. That it's not in Main Street's best interest. So interestingly, Keller Offers is continuing operations because there is a fiduciary, a real estate agent involved in that transaction, providing excellent service and advice. The other iBuyers have been out to essentially remove the fiduciary from the real estate transaction because where is their margin? I'll quote Jeff Bezos. Jeff Bezos went to all the from Amazon. He said, all of my opportunity is inside of your margin. When he was talking to Target and Best Buy and every other retailer, he said, my opportunity is where your profit margins are. The iBuyers essentially did the same thing. They viewed the real estate agent commission as a profit margin, right? First of all, there's all kinds of trouble with that reasoning, okay? When the stock market gave back all the gains it had over the last 5 years, the iBuyers got less money to deploy, here's the key point, on a speculative basis. So rather than get stuck with a ton of inventory that they may or may not be able to sell at a margin, at a profit, let alone at a break-even point, they just ceased operations. They're hitting the pause button. They're saying, we're going to hold off and wait for this.
Yeah. They're getting money from the exact same place as our non-QM transactions.
Right.
Both of those organizations make money and have an appetite / the ability to perform in an up market. In a flat market or a down market, it makes no sense. They're going to lose their tail.
Is that because the margins are so small, or?
Correct. Right. I do not believe we're going into any type of housing crash unless something very bad continues to happen. If we stay in this for 18 months, okay.
What's this? What do you?
In quarantine, we're staying at home. People don't go back to work. All bets are off, right? We stay in this for 6 months, 8 months. We start to push through the next school year, right? That would be tragic. And that's what our government's been trying to stop from happening, is that all these people, if with the current rates that I've been hearing, and I'm not a doctor, I'm not a scientist, but I've been hearing that roughly 1% pass that get this disease. And if half the country got this disease and 1% passed away, you're talking about 1.75 million people. Okay. So they've been proactive to stop us from any of that happening. I'm not a naysayer. I'm not a doomsday. I believe in this, this country. I still think it's the best country in the world. There's not a housing crisis, okay? Because of that, and if you want to know why, you want to know all the details and the information I have, population growth, future population growth, etc., I can get you there. But ultimately, we just got to help our clients. We got to help them one at a time, right? And the iBuyer is not trying to help our clients. The iBuyer is living in those margins. Amazon is a great company. I love them. I use them all the time. They make my life easier. I don't always have to go to the store, right? But I know that Amazon is not necessarily the best price all the time, or doesn't have the exact product I want. It's not the end all. It's just a piece. The iBuyer is just the piece, right? There's nobody looking to really sell their homes fast right now. I guarantee that if we took a poll, if we could somehow figure out how to take a poll, the majority of clients are not going to be so necessary about speed, except those people that have to sell. They're going to be more about convenience or knowledge or the right situation.
Well, with that being said, though, I think the challenges sellers are facing right now with coronavirus kind of running rampant, and there being now a growing fear that potential buyers or buyers agents walking through might be bringing in some, some issues there.
Hence the opportunity for like a Keller Offers situation, right? So with the other iBuyers on
virtual tours,
my own system. I don't want to make it sound that way to those of you that are not.
It's all right. Yeah.
But the other ones have paused. The other ones aren't doing anything. Keller's Offers is still doing business. So if you need to or want to sell your house fast and you don't want people walking through it, we do have a plan for that. We can get you a Keller offer if it fits in the buy box. And most stuff in Nevada does, right? So there is a solution to a very specific challenge that we have now, especially because the whole goal here is if you need to sell, if you want to sell, our job is to sell your house as quickly as possible with the least amount of inconvenience as possible to you for the highest possible attainable price, right? And so when those things intersect, you win no matter which version you use.
Real estate and mortgage is the tech companies now, guys. They're going to be using virtual tours, and you can have someone walk in and take video or have the sellers, take video and send it to the client. There are ways to get through those tough transactions. There's also, we don't need to sell every house. If you've got a seller that says, look, I just don't want anyone in my house, maybe it's not the time for them to sell.
Yeah, I think you guys are spot on. Okay, let's talk about two more things, then let's get to some of these questions in the comments. If you have any questions, please leave it in there. Go ahead and start flooding it now. And John, I know you had a couple things that you wanted to show. So first thing, let's look a little bit ahead here. Hopefully, the Raiders are still coming. And with that being said, that's going to, mean something, hopefully, right? So talk to us. What can we expect with the inevitable coming of the Raiders and how that's going to impact the economy, housing, so on and so forth?
So, so everyone constantly talked about the Raider effect, and I think we had it wrong. Okay. We all talked about the Raider effect was going to make my house more valuable last year, this year. I think the Raider effect has shifted, to use one of your guys' terms. I think the Raider effect is what's going to take Las Vegas out of this. Okay. We're hearing from the big properties either mid-May or mid-June, the restaurants and shows need to be back up and running. Okay. The Raiders will start spring training sometime in August, and they will more than likely have their first game in Raider Stadium early September. That's typically the role.
Is construction still going on the stadium, or
currently? Yes.
Okay.
Currently, yes. But I think it was this morning or last night, I can't remember. The big casino just had its first confirmed C-19 on the construction site. What's the one? The World one.
Oh, Resorts World.
Yeah. So they just had their first confirmed. Okay. Something like that might change what the Raiders are doing. So as of now, no changes. I will tell you that I have a really good friend that's a semi-driver, and he is works for a company here in town that leases all the equipment that all these big construction companies are using, the booms and so on. Says the process to get on property right now is unbelievable. They're checking your temperature. They're doing all kinds of things before they'll even let you on to try to continue to keep the virus off those sites. So we might be able to stage that off. But so let's say that it's mid-June that everybody kind of goes back to work, which I think is 30 days longer than it'll be, but it's very possible. Well, that means probably people will start thinking about going to Vegas in July or August, but maybe not go. But what kind of party does Las Vegas throw when we come out of these type of situations and we have the whole world as a stage to throw that party? And that party's the Raiders, right? How many people are going to say, yeah, let's keep our convention. Yeah, let's go see Tom Brady. Yeah, Bob, I saw your post. Tom Brady with Tampa Bay, who is playing the Raiders this year. Okay. That's going to be where people start to get normal again, and they want to come to Vegas, and they're going to see Vegas is safe.
And remember that the biggest fear for the Raiders organizations, full disclosure, I own PSLs, personal seat licenses, so I will have access to those seats and be selling some of those seats and what have you. The biggest fear for the Raiders organization in Las Vegas is that there's going to be no home games, right? Their whole concern is that it's going to be all visitors because it's a team that was brought here, not a startup team like the Golden Knights were. And most people who have PSL, assumption that sell those off to people who come in to Vegas for the game. So what better reason to stimulate the economy and travel to Vegas than you're a New York Giants fan, a New Orleans Saints fan, a Tampa Bay Buccaneers fan, a New England Patriots fan? Hey, they're playing in Vegas. Let's go and spend that money anyway. I think our curve, let's say the economy hypothetically does a parabolic move like this, a parabola, right? I think Vegas skips off the surface. Will we have pain and hurt? Of course we will, if it's a larger economic move. But we've got all the things in the world going for us to help us recover not only faster, but stronger than before we went into it.
You know, after the tragedy of October, a lot of people weren't sure they wanted to come to Vegas because was it safe anymore, right? And we showed them really fast what a great town this is, right? And we're going to show them again when the Raiders come. And who knows? I mean, there's talk about baseball still. There's talk about NBA still. We don't know if that's going to stop now because these organizations have had such expense that maybe they have to push it up for 5 years. But the Raiders and the Golden Knights are our ability to show everyone it's cool to be back in Vegas again. It's safe to be in Vegas. And oh yeah, it's a lot of fun.
Yeah, I think it gives us the sense of optimism that we need right now, right? That they're coming and as well as brighter times. It's inevitable. We're not going to be stuck in this darkness or weird funkiness forever, right? And the Raiders are one reason to look forward to the future of our city. All right. The last thing that I have on my list here that we didn't cover, and then by all means, let's go ahead and see what else is on the radar for you guys. New build. Mention something around new builds. What's going on there?
So I don't know the exact number, but I'm hearing from new builds right now that they're going to deal with their current construction, whatever's in process, but they're probably going to end up pausing on any future business if the business is not there. Why this is important is this will help the real estate recovery in Las Vegas, because now those buyers that have all been funneling towards new build have to go somewhere, and they're going to go to existing construction. So that just helps us in our market that much more. If you're a real estate agent or a mortgage person, right? Because the buyers are not going to stop. There's still people coming into this town. There's still people that are coming of age. There's still people that are having their first kid, right? So I have a video that shows the proof that if you want to know when a first-time home buyer is going to buy a home, 80% of home ownership is when they have that first child. And it's typically around 33 years old, okay? And you say, oh, well, maybe it's 2 kids. No, 2 kids is only 82%, which is basically the same number. So that means you need to be looking, if you want to be a first-time home buyer guru, for people that are just getting married or just about to have a kid. Dan, you saw the video Buck, you saw the video. It was unbelievable the amount of population coming on board and having kids right now.
And we're going to see a little micro boom of that again, I think. If at the risk of sounding like I'm joking, I think you're going to see that 9 months from now. I mean, let's just go.
Oh, sure.
Right? The other thing that's important to note with John's point, we learned a very expensive and important lesson after the crash here in Vegas. So housing construction permits are extremely low compared to what the build rate and the demand was, right? So I don't anticipate there being a significant dip in new home construction because it was already fairly low to begin with based on demand. Now, of course, people being furloughed, job situations changing, that could change that even further. Here's the good news. The new home builders were smart enough to be nimble enough to be able to pivot.
That's right. And
here's the other piece of that. New home builders weren't able to buy land at affordable rates. We've represented KB, Lennar Cal Atlantic, and a couple of other companies in the acquisition of land on my commercial side of my business. And they won't buy the land because it doesn't pencil. There wasn't enough gross margin in the development cost, labor costs, and construction costs. So the good news there is they're not overbought. They're not overexposed, which means they're not going to be left holding the bag this time around. They're very, very well positioned.
And Buck, how many more people are going to want to come to market and go find those apartment buildings right now?
That's right.
Right. So where are those people going to go?
Yeah.
Wow. Okay. We've talked about a lot, right? So kind of wrapping up a few of these things here. Actually, let's jump to a couple of these questions here and then we'll go ahead and wrap up. So first thing, we had the most recent question was John G. What will lenders be looking for to qualify buyers who have been furloughed? I'm assuming very similar to what we heard from FHFA around verification of employment still. Is there any?
So they still need to be making their paycheck. We've not seen anything yet about how to handle. It's coming. Again, it's fluid. They are coming. But if you're furloughed and making a paycheck still, which a lot are, it's no problem.
Okay, perfect. Awesome. So there you go, John. Buck, do you see well-qualified investors jumping into the market, or are they also being cautious?
So that's a great question, and I think it's twofold. I think investors are always in the market, right? Like what makes more millionaires get made in recessions than they do in good markets because the opportunity is out there. So well-qualified investors, I need a little bit more of a definition on that. I'm going to go with what I'm assuming they're discussing. If people have significant capital, they won't show up until there's a reason to show up. And by that, I mean there has to be a precipitous drop in housing prices, which we don't anticipate having, or the money that they put to work in housing will outperform their money in the stock market or the bond market. That is absolutely the case right now, right? So if you had money in the stock market, the market did one of these, but you have reason to believe that your rental income is going to continue to increase, you might start to see people take the sure bet, which is real estate, because you know you're going to have some form of a return in that while the stock market moves through turbulence. In the short term, I think investors are going to stay put or continue to operate at the rates they have been buying homes. In the longer term, and by longer term for my definition, I say within the next 6 months, especially after the election cycle, I think that they'll get back into the pool again because, again, real estate's, the money is really cheap right now, right? Real estate is relatively cheap right now. So it makes sense. If you can get at least an 8 to 10% return, you're doing a hell of a lot better than the market's doing, the stock market's doing.
The money's making real estate cheap.
Yeah, that's right.
Beautiful. Okay, you guys nailed those. What have I not asked about that's still burning at the tip of your tongue that we that our audience needs to know about or think about?
I just have one. Okay.
Yeah.
So what most of you don't know is I used to sell advertising before I got in the mortgage industry, and I sold magazine advertising specifically, and I used to call on North Face, Nike, Adidas, some pretty large companies. And I remember a conversation I had with the head of advertising at Nike. And I said, this is an adventure travel magazine. It's perfect. It's exactly your clientele. And he said, it's too late. Your buyers of your magazine are too old. And I'm like, they're 18 to 35. Like, that's your clientele. He said, no, I'm looking to buy brains. I want to buy brain share. I'm looking for 8-year-olds. And yeah, he said, if we can get kids by 8, we've got them for life. Okay. Now let me explain what I mean where we are today.
Home buyer seminars at elementary schools is what you're saying.
That's what he's saying.
No. If you help someone right now and you make an emotional connection with them and you help them with their why, you're going to buy so much of their brain share that they will be with you forever. And they will tell everyone they know about you. Now's the time to buy brain share with your time and your effort.
That's really good. And I will say to that point, John, for those of you that know me well, you know that I'm the most intellectual hillbilly you'll ever meet on the planet. I grew up in Louisiana, love monster trucks and drag racing and cars that go quick. To this day, I will buy a product that I saw on the side of a car in the 1980s. So John's 100% right. Like to this day, I will buy lava soap because of the lava jet car. It's just, you're right. That was the brain share. It's stuck in my head. I'd like to add, if I may, the one thing that's burning my tongue to what John said, and that's your job is to give good advice to the public. And the public needs you more now than ever. And here's the other thing. It's okay to not have the answer. There's a lot more respectability in not having an answer and being able to go and find that answer from smarter minds than yours. Right now is not the time to take a guess. It's never the right time to take a guess, especially if you don't know. You can really, really hurt people without the unintended consequence, right? Of trying to have an answer and sound smart. The public would much rather you say, you know what? Let me check with my broker. Let me check with my team leader. Let me check with somebody who's experienced this type of market before and get back to you. I guarantee you will grab their brain share if you come back to them with good advice. That's your job, is to educate and protect and promote the public. And they need you right now more than they ever have.
Yeah, I think the two of you have a very similar sentiment, which is what the public needs is from us is nobility, right? People who are genuinely there to help others out. And I think if I could add something to that, the general public needs that. You also have a responsibility to your family, right? To put food on the table and work your tail off. And so the key here is, yes, in running your business, it's becoming harder for you to find the motivated, but they're still out there. And all that means is working your tail off. That doesn't mean, and let me be really clear, that doesn't mean to go and motivate a bunch of people to go and buy or sell a house, because now we're going against the nobility that we're talking about. What that means, though, is go and find the motivated and help people discover their motivation through very key questions, like the ones John and Buck keep repeating over and over again to the point where you're probably getting sick of it. Why are you making this move, and how long do you plan on being there?
Well, you don't get a crop from going and cutting it down. You have to plant the seeds, and that's where all this has to start, right? So if you plant those seeds of helping, leading from contribution, helping them really achieve what they need, right? Those will come crops, and some might be right away. Some might not be for 6 months. Some might not be for 6 years, but you need to be having those high level conversations. And please God, stop asking, are you looking to buy, sell, or invest in real estate? Or do you know anyone? Like, please, can we get above that? Can we really ask questions that matter?
Cody Gibson had the best 2-question script right now for agents. How are you doing, and what do you need?
Exactly.
How are you doing?
Like, who's not going to answer that question? There's no call reluctance, right?
Yeah. Yep.
It sucks right now, and I could use a hug. Well, I can't give you a hug, but I promise when I see you, I'll give you one, or whatever, right? Like, I've been calling and saying, hey, I know you may not want to go out right now. If you need me to go to the store, I'll go. I can't sit still. I'm all over the place. I've been going out every day to the store because I want to see what's going on. I can't be alone. Yeah, I got my wife and my 2 daughters and my dog, but they get bored of me talking. So I go out and see what's going on in the stores. Is there eggs today?
And if you're looking to do specific real estate activities, like Lucy Dexter is talking about in our comment section, go and do virtual home tours. Go do virtual open houses, right? Come from value and contribution that way. I'm getting a lot of thank yous. I'm going to get killed if I don't ask this question on behalf of Roselle, who actually called me earlier. And this is a very quick one. She's asked if you can quickly go through your lending process, John. I think there's more specific question, and because you recently had a conversation with her. rate locks, right? So you mentioned earlier about 60-day rate locks. What she's trying to figure out is when should clients be looking at locking in their rates, and what does that look like?
Yeah. So we cannot lock an interest rate until the client has signed the intent to proceed. Okay. Once they sign the intent to proceed, we can lock the interest rate. Now, the client can sign it really fast if everybody's quick. It could be within an hour or two of going into contract. Okay. I'm of the belief that I'm a big believer, a bird in the hand is better than two in the bush. Does this rate work for you right now? Because it's very uncertain. It could be higher or lower tomorrow, but do you really want a chance losing this transaction over 1/8%, 1/4%? 1/8% on $200,000 is about $15 a month in payment. Why don't we just get you the right situation, get you in, help you out? I study the market. I mean, I'm watching all the big guys, and I can tell you my opinion, but at the end of the day, this is the client's decision. And if you're not working with a loan officer that explains that up front, that their interest rate's not locked until we lock that loan, you're having problems. We had numerous phone calls. She was not the only one that called me in the last week that was upset because the client was talking about and was pre-approved at an interest rate on that Friday and Monday of in the twos, and now all of a sudden it's 4.5% with multiple points.
Oh my gosh.
Oh.
So I think that answers her question. I'll reach out to her later.
Yeah, please do. Okay, so we're getting a little bit of live video interruptions on Facebook. Listen, guys, thank you so much for doing this. I'm still recording, so we'll
oh my God, an hour and a half?
Yeah, yeah, that's what happens. Time flies when you're having fun and hugging your water heater. So, listen, thank you so much, Water Heater and Propeller Head. I appreciate the two of you guys having taking time out of your day to answer some of these questions and get everybody up to speed. Let's do this again when the two of you guys have a chance and there are more updates. I just want to make sure that we're servicing our community and making sure people know exactly what to say and what not to say.
Appreciate you taking the lead, Daniel. Really great job with this, bud. Your agents are so lucky to have you at the helm, man. Way to go, bud.
Thank you. And by the way, let me know if I could support you guys in your meeting tomorrow, because I will be asking for you to do the same on Thursday. So, love you guys. All right, guys. Have a great rest of the day. Thank you all so much. I appreciate you.
Take care.
All right. Bye-bye.